Hello viewers, welcome to MDG's Coaching of Commerce. We are in the process of hire purchase. We are doing hire purchase, number of problems are done. Today we will be doing problem on repossession. We know in case of hire purchase, the agreement is just like this. By installment, the amount is to be paid by the buyer to the seller. In any point of time, if the buyer becomes defaulter, then seller can take back the asset. That is called repossession. The taking back of the asset due to the default of the buyer is called repossession. This repossession is of two types. One is complete repossession, one is partial repossession. When, due to the default of the buyer, all the assets sold by the seller to the buyer are taken over by the seller is called complete repossession. All the assets what are sold by the seller to the buyer are taken over. In case of partial repossession, all the assets sold by the seller to the buyer are not taken over due to the default of the buyer. A part of the assets sold by the seller are to be taken over from the buyer due to the default of the buyer. That is why it's called partial repossession. Say for example, if 5 items are sold, out of that 3 are taken over. A part is taken over, that's why it's called partial. But when 5 items are sold, all the five items are taken over, then it is called complete repossession. Whatever sold, that is taken over. Out here, whatever sold, a part is taken over, that's why it's called partial repossession. Today we will do one problem on partial repossession, and the problem is just like this. Gooddeep purchased 5 computers from Shilton Company on hire purchase basis at rupees 40,000 each on 1/1/2012. The agreement was to pay rupees 60,000 down and remaining in 4 equal annual amount together with interest at the rate of 10% per annum. Depreciation was fixed at 15% per annum under reducing balance method. Gooddeep had paid first 2 installments. Out in the equation, 4 installments are to be paid, but Gooddeep could pay only 2 installments and could not pay the third. In consequence, Shilton Company took over all computers. As all computers are taken over, that is why it's called complete repossession. And the thing is listed over here. On 1/1/2012, Gooddeep purchased 5 computers of rupees 40,000 each. Therefore, total amount is 2,40,000 into 5. Then and there, Gooddeep paid 60,000 down payment. Remaining 1,40,000 is to be paid in 4 equal amount, annual amount. Then how much is to be paid? Principal amount in each installment. Cash price equals to 1 computer is 40,000, then 5 computers rupees 2 lakh. Out of that 2 lakh, down payment was there, less down payment, that is 60,000. Then remaining amount is 1,40,000. This 1,40,000 is to be paid in 4 equal annual amount. Therefore, principal amount in each installment equals to rupees 1,40,000 divided by 4. This is equal to rupees 35,000. To that, the interest for the respective year is to be added, and that will be the installment. This is the principal part of the installment, and that interest is to be added to this, then you will get installment. Interest will calculate when you do the ledger accounts that time, because the rate of interest is given 10% per annum. It is to remember that Gooddeep paid only 2 installments, 3rd and 4th installments were not paid, and for that Shilton Company took over all 5 computers. That is why it's called complete repossession. Means Chilton company is repossessing all the items sold. Now we'll come to the ledger accounts in the books of Goodie. Chilton company account. Don't forget to write the dividend credit, even that rupees. On 1/1/2012, buy computers. And the cash price of the computer is 2 lakh. Goodie purchased 5 computers of rupees 40,000 each, then for a total of rupees 2 lakh from Chilton company. On the same date, means on 1/1/2012, down payment was 60,000. Then you have to write to bank account. Down payment, it is 60,000. At the end of the year, interest is to be paid 31/12/2012 by interest. Now we know interest is to be paid on the outstanding balance, and outstanding balance means 2 lakh, out of that 60,000 is paid, remaining amount is 1,20,000, that is called outstanding balance. On that outstanding balance, the interest is to be calculated. Rupees 2 lakh minus 60,000 into 10%, because the rate of interest is given 10%. Then 1,40,000 into 10% means 14,000. On 31/12/2012, to bank account, first installment. In the installment, every installment principal amount is 35,000 plus whatever the amount of interest you get for the respective year. Over here, principal amount you have to pay 35,000 and interest for this year is calculated here, it's 14,000. Then it is 49,000. Then you have to calculate the closing balance. Closing balance is the difference. We know the credit side is more, you can see this thing. Then to balance CD on the same date. To balance CD, this one is 1,05,000. Now on 1/1/2013, by balance BD, it is 1,05,000. On 31/12/2013, by interest account, 1,05,000 into 10%, 10,500. And 31/12/2013, you have to pay the second installment, and in the equation, second installment is paid. Therefore, you have to write to bank account. Second installment. Second installment will be, principal amount is 35,000, you have calculated. In each installment, principal amount is fixed at rupees 35,000 plus whatever the interest for that year. Interest for the second year is 10,500, then total is 45,500. And then we are getting a balance of rupees 70,000, that is to write as to balance CD. To balance CD is to be taken as opening balance on 1/1/2014 by balance BD, that is equal to 70,000. 31/12/2014. This is the payment date of third installment by interest account. Interest is to be calculated on 70,000 at the rate of 10%. 7,000. So you have to reach to the third year last. Because in the third year last only we can understand that the installment was not to be paid. And therefore what to do? By balance BD 70,000, by interest 70,000 to 10%, 7,000. Now we reached to the last date and then we came to know that the installment was not paid. Now all the assets have to be taken over by the seller because of the default of the buyer. Then what to do? When you purchase the asset, we wrote computers account debit to Shilton Company account. And when Shilton Company is taking over all the assets, it's to be reversed. Shilton Company account debit to computers account. Then Shilton Company account debit to computers account will have to do on 31/12/2014 to computers account. Shilton Company account debit to computers account. This one is repossession. And the repossession is to be made at rupees 77,000, is total of this. Then very strictly you need to remember in which year repossession is made. You have to go to that year, you have to take that balance BD, then you have to calculate the interest also up to the last date or up to the date of installment payment, then you go for repossession. In case of complete repossession, the total amount will be transferred to the respective asset account. Now what we'll have to do is, we have to prepare computer account, we'll have to show how that repossession is shown in the computer account. Okay, the asset is computed and first entry on 1/1/2012 we wrote by computer in Shilton Company. Therefore, out here it will be on 1/1/2012 to Shilton Company account and it is 2 lakh. It is purchased at rupees 2 lakh. At the year end, depreciation is to be charged 31/12/2012 by depreciation account. 15% the rate of depreciation it is said, 15% on 2 lakh is 30,000 and the remaining is to be taken as balance CD. And by balance CD is coming 1,70,000 because the total amount is 2 lakh. This is to be taken on the opening date 1/1/2013 to balance BD. It is 1,70,000. Due to the narrow space, I write some abbreviation. Some abbreviations like balance, like depreciation, I am writing in this way. 31/12/2013 by depreciation account, 15% on 1,70,000. You can calculate also, you can show the calculation, no problem. It is 25,500 and the balance is to be written this way, balance CD 1,70,000 is the total and you'll get a balance of 1,44,500. Now on 1/1/14 to balance BD 1,00,000 44,500. This is a year of repossession, but repossession is made only on the last date. That is why we have to go up to the last date. 31/12/2014 by depreciation account. It is to be calculated in this way: 1,44,500 into 15%. It is 21,675. This is the opening balance, and on that opening balance, 15% is the rate of depreciation, and the depreciation is coming 21,675. Then we can't write balance CD because the computers are taken over. If the computers are taken over, balance CD we can't write. Balance CD means you are taking it to the next year. But as the computers are taken over by the seller, you can't take this in the next year. Come here and see in Shilton and Company account, we wrote two computers account, 77,000. That will go there. In the credit side, by Shilton Company account, it is 77,000. This is the repossessed price. Means Shilton Company has taken all these 5 computers at rupees 77,000. That you can see from here. The Shilton Company has taken all the computers at rupees 77,000. This is the amount due, and that amount could not be paid. That is why Shilton Company has taken over all the assets. Then we can understand in this way that Shilton Company, as this 77,000 is not paid, taken all the computers. It means Shilton Company has taken all the computers at an agreed value of rupees 77,000. That 77,000 we are taking here, and the remaining amount is the loss. Because 1,44,500 computer was there on the opening date. Out of that, 21,675 depreciation, and seller took the computers at rupees 77,000, and the remaining amount, the remaining balance, will be taken as loss. 1,44,500 is the total amount. Therefore, this is loss, and that loss is to be transferred to profit and loss account. Loss transferred. Then what we have done till now? First, the asset for 5 computers are purchased at rupees 40,000 each. Then for all 5 computers, total cost is 2 lakh rupees. Then and there, down payment was made of rupees 60,000. The remaining outstanding amount is 1,40,000, 2 lakh minus 60, 1,40,000. On that, 10% is the rate of interest, and total 14,000 interest is to be paid at the end of the first year. And at the end of the first year, you have to pay the first installment. In the first installment, we already calculated that 35,000 is the principal amount is to be paid, and the interest we calculated 14,000, and 35 plus 14, 49,000 you are paying. Remaining balance is 1,05,000. That is taken as opening balance in the second year. Again we calculated interest, 10,500 we got. Then you have to pay the second installment. Second installment, again the principal amount is 35,000 and interest is calculated 10,500, 10% on that. Then total amount 45,500 and the balance came out as 70,000. The balance is taken as the opening balance of the third year. On that 70,000 we calculated interest at 10%, we got 7,000, and at the end of third year all the assets are repossessed because Goodby could not pay the third installment. That is why total 77,000 is to be transferred to computer's account. This is the repossession entry. Now if you go to the computer account, on 1/1/2012 it is purchased to Shilton Company account 2 lakh. Depreciation at the end of the first year, it is at 15%, and then on 2 lakh 15% means 30,000. The remaining balance is 1,70,000. This is the closing balance at the end of first year. take as opening balance of the second year 1,70,000. Depreciation is to be calculated on that 1,70,000. 1,70,000 into 15%, that is 25,500. Closing balance came out as 1,44,500. It is taken as opening balance. This is the year of repossession. Repossession is made on the last date. Therefore, you have to go up to the last date. Then you have to charge depreciation for the whole year by depreciation. On 1,44,500, it is 25%. Sorry, 15%. 21,675. By Shilton, because the computers are repossessed at rupees 77,000. We wrote over here in Shilton Company 2 computers. Therefore, in computers it will be written as by Shilton Company account 77,000, and the remaining amount is coming as loss 45,825. This is loss. Doesn't mean that every time there will be loss. There may be some profit also. If you will get profit, that will come in the debit side, and then you have to write 2 profit and loss account, that profit amount and profit transferred. I think this question you understood, this complete repossession question. In case of complete repossession, to remember at last total amount of the hire vendor's account is to be transferred to the respective assets account. This is the main feature of the complete repossession accounting. I hope you understand this question. If there is any problem, then you do it for number of times, and after that also, if you get problem, you contact me directly through my email, or you can put your doubts, you can put your queries. If there is anything not understood, then also you can send me to comments also. Thank you very much.